Welcome back everybody to my channel where you subscribe for daily videos on everything going on in cryptocurrency. It's me. In today's video, I want to share with you 3 major updates from the past few days that I think you need to know about. Let's go ahead and get started. The first thing we have to talk about in today's video is some good news coming out of FTX. Sam Bankman-Fried and FTX have decided that they are going to be doing a second round of token distributions to customers who were affected by the collapse of the exchange back in November of last year. The first distribution was earlier this year and the second round will begin on May 30th and continue throughout the summer. And there's a lot of questions around this. What tokens will be distributed? What kind of percentage of their claim can people expect to receive? And what does this mean for the overall restructuring of FTX? So to start, this is important. Eligible users will receive a mix of FTT and liquid equity in the new FTX. So the new FTX is giving out both FTT stock and FTT, the cryptocurrency token. Now, according to FTX, the initial allocation of these distributions will be made up of 8% FTT equity and 2% FTT cryptocurrency. But it is very important to note here that these percentages may change based on market conditions and other factors that may arise. Additionally, FTX said that after the first round of distributions is complete, they'll provide more details about the second and third rounds. FTX noted that while most users should see their balances credited automatically, there are certain circumstances in which users may have to opt into receiving their FTT stock. They also noted that FTT equity can be sold on the open market just like any other stock. That's important to understand here. So if you were an FTX user during the collapse, you may have your claims paid out not only in FTT cryptocurrency but also in FTT stock. And again, the stock you can trade freely. If you don't want to hold it, you can sell it on the market. Let me know what you think about this down below. Now, I am gonna read through some of your comments here on the previous videos that I posted on this. When I initially shared this news, this was one of the top responses. A person named David said, quote, "This makes no sense at all. Why would you airdrop the same token that got everyone wiped out in the first place?" Well, there's a few different ways to look at this. One way is to look at the fact that FTX still has some value left. Even though the exchange collapsed, even though there's bankruptcy proceedings going on, even though they're trying to pay out users their claims, there is some money left over and so they're giving out additional FTT, the stock, in hopes that maybe that FTT, the stock, can help make users whole. Another way to look at this is by looking at the new FTX. New FTX is raising funds, and they are able to use this as a marketing tool to say, hey, if you want to support us, if you want to buy FTT the stock, we're going to distribute it to our customers. A lot of people may not realize this, but the stock market works in a very similar way. Imagine if GM or Ford or Tesla issued some free stocks to their customers after a recall or something bad happened to them. You probably wouldn't think twice. You'd probably say, oh well, cool. Let me hold this stock, maybe I'll trade it, maybe I won't, maybe I'll use it to buy another car later on. Probably wouldn't give it a second thought. Yet when this happens in crypto, people call it unfair and biased and all sorts of things. Let me know how you feel about this down below. But that's the first update for today. That's no. 1. Now let's move on to no. 2. I want to talk to you about the United States and how they may be considering holding Bitcoin, Ethereum, and other digital assets. I covered a story the other day where Bill Hagerty, a senator from Tennessee, proposed a bill that would allow the United States Treasury to buy and sell digital assets. Well, now this story is picking up steam because Janet Yellen, the Treasury Secretary, said that this week that she wants to see Congress pass legislation allowing the U.S. government to explore the benefits and risks of holding digital assets directly. Here's what she had to say. We need a clear legal framework that gives us the ability to hold digital assets directly on the balance sheet of the Treasury, which is very different than issuing a CBDC. I would like to see Congress pass legislation specifically granting us that authority so we can explore the potential benefits and risks of holding digital assets directly on the balance sheet. Let's break this down here. So, this is big news. She's saying we should hold digital assets. We shouldn't issue a CBDC. There's a difference here. And there's a reason why she's making this distinction. A CBDC is a central bank digital currency. It's a currency issued by the Federal Reserve. Digital assets are different. The United States holding Bitcoin, Ethereum, other digital assets, maybe even NFTs is different than issuing a CBDC. Let's take a step back here and look at the bigger picture. You might remember last year, the White House released their executive order on crypto policy. In that executive order, they called for a report on a CBDC. We saw that report come out earlier this year, and in that report, they did not recommend the United States launch a CBDC, but instead recommended that we allow other stable coins to compete with the dollar. Then we saw legislation come out recently proposing that the U.S. Treasury be allowed to buy and sell digital assets. Now, we're hearing from the Treasury Secretary herself saying that this is a priority of hers. She wants Congress to pass this legislation. Let's think about the implications here. The United States is the world reserve currency. If the United States starts buying and holding Bitcoin, imagine the effect that could have on the price. If they also start buying Ethereum and other altcoins, the effect could be monumental. And I know this is a topic that many people feel strongly about one way or the other. I personally believe that this is a sign of progress. Of course, I'm going to be interested to hear your thoughts on this down below. And speaking of progress, that leads us to the third piece of news for today. Traditional finance continues to push forward in adopting crypto. Just yesterday, Cantor Fitzgerald, a major Wall Street financial services company, added $100 million worth of Bitcoin to its existing Bitcoin fund. And then today, we woke up to news that the trading platform Moomoo, which is backed by the Chinese tech giant Weibo, is working with Coinbase to offer crypto services in the US. So, this is big news. Let's dive into it. According to Bloomberg, the brokerage aims to roll out the service in the second half of this year. And the first phase will allow users to buy and sell for cryptocurrencies, Bitcoin, Ethereum, Litecoin, and Bitcoin Cash, with plans to expand offerings in the future. So, this is big news because Moomoo has over 1 million users. And most of those users are in the United States, meaning that they'll have access to Bitcoin and crypto through their platform. Let me know what you think about this down below. Do you think this is good news? Do you think this is bad news? And do you think that traditional finance adopting digital assets is a sign of progress or a cause for concern? Let me know what you think down below. That's all I got for you today, my friends. 3 major stories from the past few days that I think you should know about. FTX beginning to pay out claims to users. The US government continuing to discuss the possibility of holding Bitcoin, Ethereum, and other digital assets, and traditional finance continuing to push forward in adoption by offering Bitcoin and crypto trading to their customers. Let me know what you think about all this down below. Thank you for watching. Please like and subscribe for more updates. Check out my international channels if you aren't already. Enjoy.